When you come to 212 Tax for our business blueprint, we're doing a complete analysis of your business and personal tax and financial situation. It's a comprehensive review dealing with strategies that we've learned from the top family offices across the country. We're not only reducing your taxes, we're helping you increase your wealth and helping you protect your family while maintaining the growth of your business. The biggest problem businesses have that profit hundreds of thousands or even millions of dollars is that they don't plan for taxes. They don't look at their financial statements on a monthly or quarterly basis and put money aside. So when April comes around, they have this big tax bill and they don't know how to catch up and start paying it. We had a client come to us recently. They thought they can go to the higher level of TurboTax, which is the one where you have a live CPA and all that. And they submitted all the K-1s and documents to them. And then the day before the deadline, the TurboTax CPA came back and said, sorry, this is out of our wheelhouse. The tax compliance gap review is an important part of the 212 Tax business blueprint because the tax gap compliance review can prevent you just filing, thinking you're up to date, and then getting a notice or a bill from the IRS or state and local authority asking you for penalties, interest. We'd rather find the mistake before the government does. The year-end tax reduction playbook is an important part of the 212 Tax blueprint. There's several things you could do before December 31st to not only save you a lot of taxes in the current year, but also to build wealth tax-free. Another important part of the 212 Tax business blueprint is what we call accountant quality control review. And that's when we want to take a deep dive into your last couple of years' tax returns and make sure they were prepared correctly. It's quite often that we see taxpayers set up the wrong way, whether they're an LLC, C Corp, S Corp, just a sole proprietor. So it's important to review that every few years, to make sure that you're at the right structure for the state and city you're in, and that you're not overpaying taxes because you're in the wrong type of entity. If you're a business located in New York City, but you can operate it from other places, Texas or Florida, a state with no income tax, not only will you save on the state and city income tax, but you'll be able to be an S Corp because you won't have this New York City corporate taxes to deal with anymore. What we do to save our clients money who are making these 7-figure or 6-figure type large profits is planning for the defined benefit or cash balance plan. A defined benefit plan is basically for people who make larger profits that a SEP IRA or a solo 401k won't really do them justice because you can only put away $70,000 into those. The family wealth transfer strategy is another important part of the 212 Tax business blueprint that we meet with our clients quite often and try to have them not just accumulate wealth, but accumulate it tax-free and plan for the next generation. When my brother and I were younger, my dad's business was doing quite well, so he bought cash value life insurance on us when we were quite young. Now that we're a lot older, not only did we keep contributing to that policy, but we converted it into something called a VUL, a variable universal life insurance. They call it like an unlimited Roth because there's no $7,000 to $8,000 limit to put in money. It grows tax-free like a Roth, there's no limit, and you could borrow against it at pretty much no interest whenever you want. In terms of buying life insurance or creating certain types of investment vehicles, by buying it for a child who's 15 years old, as opposed to them waiting until they're 25 to buy it themselves, that 10 years of tax-free growth can mean millions of dollars. A lot of these tax saving and wealth growing things we're talking about, I know they can be quite daunting, but that's why we have the 212 Tax business blueprint, so we can sit down, analyze your last couple of years of returns and financial statements, and then make a plan going forward to make it a smooth transition and a smooth year by year, month by month, quarter by quarter, in saving you money and growing your wealth.